Dear investors, Prasenjit Paul here. In this video, you will learn why an Indian should invest in global shares like Google, Amazon, Facebook, etc. And then, is it really legal to invest in global shares in US currency? And the important points you should remember. And then last, the most important, how one can invest in global shares with absolutely zero brokerage, no associated cost. Remember, while you invest in Indian stocks through Zerodha Up stocks in zero brokerage, apart from zero brokerage, you will find there are associated costs like SEBI charge, STT, government tax, etc. So apart from zero brokerage, these charges are there. But in this video, I'll show you how legally you can invest in global shares without paying any brokerage, any associated cost. So if you purchase a share at $10, you just have to spend $10 only, no associated extra cost. So must watch the video till end. So let's start with why to invest in global or foreign shares. See, almost every Indian, almost all of us are using services of these global giants like Google, Facebook, Amazon directly or indirectly. Like for example, you are listening this video on YouTube. YouTube is owned by Google. Then if you are using Android smartphone, then whatever the apps are listed in the Android phones, so all the apps need to pay money to Google. Then there are Google Maps, Google search engine, and so many. In Facebook, hope you know that the Instagram and WhatsApp are also owned by Facebook. Then Amazon, even if you don't shop in Amazon, then you'll be interested to know that many emails or the websites, those are hosted on the Amazon web server. So directly or indirectly, you are using this Google, Facebook, Amazon, Microsoft, Apple, and all such companies. So you are contributing in their profit. So why not benefit from them? So you are responsible to maximize their profit, but you are not getting any option to invest on these shares to take a part of their growth journey. So you should invest as you are a direct user of these companies. The second reason, in US, there are many technologically advanced, innovation-led companies which have huge moat, first mover advantages. Like as I'm talking about this Google. So the kind of innovation that Google they are doing day by day is very rare. You won't find any such Indian companies, because if you compare Indian companies, even starting from all biggies, from Reliance to even the small companies, so Indian companies don't spend a lot of money in research and development. On the other hand, US companies spend a huge lot of money in this research and development. This is why you will find these companies, Google, Facebook, Amazon, Microsoft, Apple, and many more companies, they have created a huge moat, a competitive advantage, and almost no such competition. Like in Google, like there is virtually no competition of YouTube. There are many video hosting sites, but YouTube is so big that nobody can come very close to YouTube. So these are the companies that you won't find in Indian stock market, unfortunately. So one of the reasons to invest in this foreign shares to take part from this, and the obvious reason, the return maximization and diversification. So diversification means if you have a part investment in Indian companies and also part investment in global companies, so if any one market do bad, say for example in India, any geopolitical tension arrives, like maybe India-Pakistan war or India-China tension or whatever, then your portfolio might not, when both the portfolio might not be affected at the same point of time. So obviously diversification is another reason. Now the question is it legal? Yes, under RBI's LRS, a resident Indian can remit or can invest up to $250,000 per annum in overseas market. So that turns out around 1.84 crores INR Indian currency as per the current exchange rate per annum. Remember, so no future and option trading, no currency trading is allowed. Those are illegal, but investment is legal. What are the key points? And also in the description box, I have provided the RBI's link where frequently asked questions about the legality is mentioned. Now the key points you should remember is, number one, every time you remit money or you send money for investment, you need to pay some charges to bank, and these charges vary from bank to bank. Remember, this remittance you can't do through these new age startups like Book My Forex, DCB Remit and all, you must have to go through any bank, and depending on the banks their charges might vary. So I'll make another video on this remittance, and also the paid subscribers of my website prasenjitpal.com, they will get a detailed analysis on this. Number 2 is tax. Capital gain tax on the US shares, that is taxed in India. And what is the tax rate? So if you are holding the shares for more than 2 years, more than 24 months, so that would be a long-term capital gain tax taxed at 20% with indexation benefit. So with indexation benefit, the tax rate will come down. And for the less than 24 months holding, if you book profit for holding less than 24 months, that would be taxed as the income tax, your slab. Remember, that's as on the current date. And the dividends, so dividends are taxed in US, but the interesting thing is, as India and US have a tax treaty, so whatever the dividend is taxed in US, so that you will get tax credit at the time of annual income tax return filing. Number 3 important point is, remember the currency risk, which can turn a benefit as well. So what is this currency risk? Say for example, today you had purchased a stock at $1 and currently $1 is traded at 70 Indian rupees. So now at the time of selling, say for example, you are selling at the same $1 as well. Now if Indian rupees turns 75 at that time, so although you are not making any gain from $1, but as the currency moved up from 70 to 75, so you will gain 5 rupees. And historically what we noticed since the last 10, 20 or even 30-40 years, Indian rupee generally depreciated. So earlier, a lot of times ago, that was 31 US dollar equal to 30, then 40, 50, 60, a long period of time it hovered around the range of 68 to 70, and then now it's around 73 to 75 kind of range. So this currency risks can turn out in your favor as well. Now the question is how to invest. I'll make a quick comparison of the brokerage platform. See, since the last many months, I myself investing in the US market. So whatever I am telling in this video from my own experience, and that you can benefit from my own experience. So here is a quick comparison. So all the mainstream brokerage like ICICI, HDFC, Kotak, they also offer this US investing platform. So they simply tied up with another US broker to offer the service for Indian. And then I'll talk about another app-based platform, that is Vested Finance. Let's compare about the brokerage. Obviously in ICICI, HDFC, Kotak, this platform, the brokerages are quite high. However, with Vested Finance, you have a completely zero brokerage. Then in ICICI, HDFC, there are also monthly, in few plans, not in every plans, there are monthly maintenance charge or maybe yearly charges. There might be a requirement of minimum balance as well. However, with Vested, there is no such yearly subscription, monthly charges. There is no such minimum balance to maintain. So you can start investing with $1, $10, $100 as well. Sorry, $1 is very funny to say. So $100, whatever the amount you can. There is really nothing minimum amount to maintain. Now the question will come, even that strike on my mind, if Vested Finance offered zero brokerage, zero commission investing, then how they earn money? So that answer lies in the Vest. So basically Vested Finance is an investment advisor and they earn money from their advisory service. So they curated a basket of stocks called Vest. So it's like, say for example, they had created a basket of companies like Visa, MasterCard, PayPal. These are the payment companies. So if one wants to invest in payment companies, instead of investing in all those stocks, they can invest in Vest. And once a person invests through Vest, then Vested Finance earn money from them. But if you invest in individual companies, say for example, if you are investing one share in Amazon or one share in Facebook or one in MasterCard, so there is absolutely no brokerage. Another interesting point is this fractional investing, which all this platform offers. So what is this fractional investing? This is very interesting concept. See, a single Amazon share is quoted at around $3,000 at the time of making this video. So that turns out around 2,10,000 Indian rupees. So if you are going to invest only one share of Amazon, you have to invest 2,10,000. That's a huge money. However, with fractional investing, you can invest 0.1 or even 0.001 of Amazon. That's a huge benefit. So you can literally invest 200, 2000 or 5000, whatever you want in Amazon, Google, or whatever the shares. Similarly, Google is also priced at around, Google, the company is Alphabet Inc., priced around $1,500. So if you're going to purchase one share, that's a lot of Indian currency. However, with this fractional investing, there's a huge convenient even for a small investors. Apart from this, there are many another platforms like Interactive Brokers, Webull, WinVista. So these are emerging, and even Zerodha and Upstocks, they are also planning to introduce this international foreign share market investing. So I don't know their release date, but I know for very sure that Zerodha is seriously considering it. So as investing with Vested is completely free of cost, there is no brokerage, no exchange fees, no commission, anything. So before opening account, I was interested to know how safe is this Vested Finance. So after a lot of Google search, after a lot of studying, so what I find is this: Vested is a SEC registered investment advisor. SEC, what is SEBI in India? There's the investment regulator of US. So and then whenever I am opening account with Vested, so my shares are not actually staying with Vested, rather they are staying with a company called Dry Wealth Securities. So even if Vested shuts down for any reason, then the shares will remain in the Dry Wealth Securities. I can sell these shares through another trading platform. Now even if both the Vested and Dry Wealth both are shut down, then SIPC insurance kicks in. That's also an US regulatory thing, and that insurance covers up to 500,000, so which is approximately 3.6 crores of Indian rupees. So that's a very good amount which is secured by SIPC insurance. That's the ultimate case if for any reason all this are shut down. So I hope this situation won't arise, but even if such situation happen, then there is an insurance. That's actually the US regulation. And another interesting point, the encouraging thing that I noticed is very recently Axis Bank, their Axis Securities tied up with Vested Finance to offer this US investing for Indian customers. So Axis Bank might noticed something strong in this Vested Finance, that's why they had tied up. So as per this and as per all these findings, so it is relatively safe to open account with Vested, and thus I have my account with Vested. The interesting point is, if you can open account using my referral link, the link is in the description box, you will get $5 credit. Remember, there is no brokerage, there is complete digital account opening process. So from your home itself, using just 10-15 minutes with the PAN number and Aadhaar, so you can open the account. There is, I think, a nominal account opening fees of 399 Indian rupees, and if you get this referral credit going from my link, so $5 will translate I think similar kind of amount. So that cost, account opening cost, you can also recover. So before opening an account, make sure that you are opening from my referral link, and you will get a message that you will get $5 credit through opening the account. Now the next question might come, what to buy in US or in foreign shares. See, if I am talking about my personal experience, I am investing in those shares, those type of companies, those are not available in India. For example, as I mentioned, high innovation led companies, so those have the high competitive advantage. And remember, those innovation led companies are not only from the technological sector. So in US market, there is a whole lot of company, even in FMCG, the food company, there are many. They are also, they developed some kind of very innovative and research and development led products. Those are far ahead than competition. So personally, I prefer investing companies like Google, and then many other innovation-led companies having huge competitive advantage, far away from competition, and they have companies such have the next maybe 5, 6, 10 years bright future prospects because of almost no competition, customer lock-in. As I am talking about this Facebook, WhatsApp is enjoying almost monopoly in the in India and also in world. There are obviously many chat platform, but as many of my friends, almost all of my friends and relatives are using WhatsApp, so I can't get away from WhatsApp itself. Same with the Facebook, Instagram, things like, as all my friends are in Facebook, so I can't switch to another social networking site, although there are many social networking sites. So these are the things that creates the company unique, and these are customer lock-in and networking effect makes the companies great. So not only technological companies, I am invested in FMCG companies related to healthcare sector, companies related to finance and all. So with all this, you can get my buy and sell, what I am buying and I am selling with portfolio allocation, subscribing the follow my portfolio service in the website www.prasenjitpal.com. So that's it from my side. Hope you like the video. If you have any further queries related to how to invest in global shares, how to invest in foreign shares, or of vested finance, you can comment in this video, in the comment section of this video. I'll personally try to address all of your queries. Also, you can share this video to social media platform or to any of your friends or any Indian investors which you might think that they might be benefited from this US investing. And also, if you like this helpful, make sure to subscribe the channel, so that in future if I publish any related videos, or normally I publish multiple videos on stock market, Indian stock market as well, how to avoid loss in the stock market as well. So once you subscribe, you'll get the any future notifications once I publish the videos. So again, I sincerely hope you like this video. Do mention your feedback on the comment section, and as of now, that's it from my side. Thanks a lot for watching the video.